Good morning, baby whales, mini dolphins, and tiny, tiny little penguins. How are you all doing today? It is now Tuesday, February the 13th, and we're going to talk about Bitcoin, and this is going to be an afternoon update. If you guys appreciate these videos, I would also appreciate an upvote on steemit, and make sure you also like, subscribe, and share the material as well. So I had a really good dream last night, guys. I dreamt that I was Chuck Norris and I was mining Bitcoin, found every coin in 5 seconds, and then I broke the blockchain. Hey-yo! That's my Twitter joke for the morning. The second Twitter joke was, in Mother Russia, Bitcoin mines Chuck Norris. No blocks were ever found. Oh my goodness. Okay, we're gonna get started now, okay? We're gonna talk about a lot of different topics today. So the way to treat my videos is educational, mainly, all right? Education is really important, and whether it's a prediction video or not, you guys don't want that. Trust me, you don't want to follow some person who's only going to give predictions, right? What we want to do is we want to develop our own skills so we can formulate our own opinion. And I personally think that that's one of the best ways to obviously trade and to develop our skills. So let's entertain this idea again of the ABC with a truncated WXY, or with an ABC and a truncated WXY. So whenever I bring up a terminology that people may not know, I'm going to explain it actually. So truncated, you don't hear this often, okay? Truncated refers to just falling short, pretty much. Falling short of A, okay? Falling short of a specific point. Now, if it was on an uptrend, right? A counter trend like that, this would be a truncated C right there, where the C doesn't quite fall to the region of A. And this usually happens when the A moves down too far and too fast. And when this happens, well, unfortunately, things are, all the strength was exhausted in the wave coming down. And because it was exhausted in the wave coming down here, there's no more strength for the C wave to come down. So I will label this, I like my big annotation, so don't mind for the people who are annotating it properly, unlike me, who's just choosing the biggest one here, because I like the way it looks on a super millennium. So we'll call this ABC here. And we're always going to do a quick review of our Elliott waves here. 1, 2, 3, 4, and 5. And then we will draw our A, B, and a C like that. And then the next thing that we do is we're going to look for another ABC structure, which goes something like this. That goes A, B, C in here. Now, I'm going to explain to you guys the mechanics really quickly of Elliott wave WXYZ for the people that are not familiar with it. So this is an Elliott wave, typical zigzag impulse 5-wave up. An impulse wave always has 5 ups on the uptrend, okay? And then we can, a good one at least, of course it can fail. And now what we're going to talk about is failure. We first of all like to treat wave 1 and 4 as a hard resistance, or support rather. And then we have an A and a B and a C coming down like this. And a lot of the times, it's very expected for it to bounce off of this region because wave 1 and wave 4 created a support. What was formerly a support is now a resistance, and what was formerly a resistance is a support. So then, after it finishes its ABC, it attempts to break upwards into an impulse wave. And a lot of the times, it'll fail because ABC is simply not enough. So if that fails, it actually makes an extended correction, like how we are in right now. It makes another ABC type of correction, like this. And then we would denote this by WXY. I should probably star this. I use it so often. Actually, no, I don't. I don't use it that often. You only use it pretty much one time. So this would be your W point, where the C ends. The X over here denotes failure. Think of X as in failure. And then you get a Y down here, okay? And now, what we're going to talk about is what is going on right now. What is going on right now is this. We are attempting to make 5 waves upwards. Attempting, please keep in mind, okay? Now, if this wave ends up failing, right? If that wave ends up failing, instead of calling it an A, B, C, or 1, 2, 3, 4, 5 going up, we now have another wave going up that is now called WXYZ, because we get an even more extended type of correction. And guys, it can only happen 3 times, okay? This WXYZ, the triple combo for ABC can only happen 3 times. So even if we failed here, we'll make another correction, and then finally the impulse wave will go up. But then, you know, if this whole thing fails, we will attempt to make an impulse wave up, then yes, it can fail again. But usually the impulse wave will start at the end of a triple wave, okay? It's usually just what happens, and we can find many WXYs within WXY's Z's as well, right? So that's how we have to look at it. So now instead of getting a 7 or 3 wave structure, we actually get an 11 wave structure. So that's your X, your first point of failure. This is your Y, where ABC ends. This is another X over there, and then we get another Z or Z right there. Then this makes our 11 wave structure, just like that. I'm just going to delete this very quickly because of my OCD issues, which is actually really awesome because I'm so meticulous because of it that everything needs to be, yeah, if you guys are meticulous and you guys have OCD issues like me, it's not really that bad. It's only on the charts, but it's going to get you guys really far. So don't ever feel bad about having that skill. It's pretty cool. So now I want to also make this the same degree. That's a primary. Okay, minor. Actually, yeah, sure, that's fine. Minor. And then we get an ABC within the A, because these can also come in 3 waves sometimes as well. I won't get too into that, but this can also come like that as well, where we get an ABC coming down there. And the important thing is we always look for 5 waves coming down here. And this actually is a pretty good measured move, right? This one here, we test the wave 3 to see the length of it. Excuse me. And what we see is that wave 3 is actually longer than wave 1 just by a hair. So we accept this count, okay? We accept this as a third count because this one moved 24.84. This one moved 23.97. Wave 3 is never the shortest. And because we can accept this as a count, it now officially marks the end of our wave 3. Or our C position rather, and all 5 waves are counted in here. So that's how I was also able to nail, if you guys remember me, I literally called the bottom, guys, at $6,000. We were there together. We were all there together, and I hope you guys made some immense profits during that call of mine on Twitter. If you guys are not following me on Twitter, you've got no idea what you guys are missing. You're gonna get yourself a lot of comedy, there's lots of entertainment. I think a lot of people follow me on Twitter, not even for the technical analysis. They just follow me because of my outrageousness, you know, so yeah, so make sure you guys follow me on Twitter. And then we counted this right here in a very irregular way, which was, it was really hard to count this one, right? I didn't really know how to make a count of it, but this is the best I could do. And as Elliott wave traders, we try our best to count it, guys, and sometimes it fails. And the way that is generally accepted here would be considered a leading first wave diagonal. Now, I want to show you guys the mechanics of a leading first wave diagonal, okay? It will go something like this, okay? Like that. Actually, I should probably draw this first. I would draw a wedge like this. Now, the leading first wave diagonals are only found in the first wave, right? If that was not understood by now. It's only found in the first wave. Make sense? So we're talking about on an uptrend, on the first wave, or the 5th wave. So please keep this in mind, okay? It can be found on the entire structure of a first wave, the entire structure of a 5th wave, right? And then it can also be found in the subwaves. So it can be found in wave 5 within wave 1, and it can also be found within wave 5 of wave 5, where both of those waves 1 and wave 5 as well can also make a leading first wave diagonal. And it is very important to understand this mechanic because you guys need to get this out of your heads with your comments about how wave 4 cannot overlap the territory of wave 1, okay? You guys need to understand a lot of the different sub-rules. Those are very basic rules that you guys have down already, and that's awesome, but we need to expand your guys' knowledge as well so you can understand how overlapping of the waves can occur, okay? So overlapping of the waves can absolutely occur in a leading first wave diagonal. And here, a lot of people have made arguments. Okay, your wave 4 is in your wave 1 territory. No problem. This is a leading first wave diagonal. Oh, okay, your wave 3 is actually shorter than wave 1. No problem as well, because wave 3 is often the longest, but never the shortest. As long as wave 5 is smaller than wave 1, this is a definitely 100% acceptable count. So before you guys comment on that, And I correct everybody who says that, because that rule there is a very, very basic rule, in my opinion. No offense to anybody. So I just want to make sure you guys understand the mechanics of a leading first wave diagonal and why this count is generally acceptable, okay? So now we see this wedging into here, right? It is not the best first wave diagonal, right? Not at all. I would generally draw it through the wick right there that will intersect this right here, right? Something like that. This is the way I would generally draw it, right through the 55 EMA, and then we get our massive wedge somewhere in here, like that, okay? Nice? Right, this is our leading first wave diagonal. Now, there's many arguments, guys, about how this is actually supposed to be, okay? I'm going to go through all the different cases, and we're going to go through the bear and the bull scenario. Actually, let's leave this up right here. Now, a lot of people might even argue that this is an A, B, C, and I see the validity of this as well, okay? I absolutely see the validity of this point right here. Now, let me explain to you guys Elliott wave as well. We're gonna, excuse me there. I almost burped, excuse me. I gotta have a sip of my water. So Elliott wave says this: for waves 1, 2, 3, 4, and 5, after this, everybody assumes, okay? Everybody assumes that A, B, C is in a typical zigzag. But sometimes, guys, when there's enough bullish momentum, the B can actually go right up there. And then we get something like a flat like that, okay? Or an expanding diagonal. So, well, not really an expanding diagonal. That would be an impulse. But the point is the B would actually be higher than the point of 5. And we're going to go through both possible counts. So let's say that this right here was A, B, C. Then this would mean right here that this is wave 1. I'm going to call this little baby 1. That's wave 2. That's 3. And that's 4. And there's a 5th one somewhere up there, okay? That's a pretty valid count as well, right? I mean, and this one's acceptable because we take our wave 1. And remember my rule, guys, in leveraged markets, we are going to allow an overlap of the wick. So if you guys actually look right here on a 1 hour time frame, not really an acceptable count, right? Because now we got the bodies of the candles going through there. But when we get to a higher time frame, guys, all that we're seeing are wicks basically, right? We're just seeing wicks that puncture through it. And if you look on any Elliott wave book, they'll mention that in non-leveraged markets, this happens. So I always accept the rule of a wick, right? And this is, it's very loosely used as a guideline like that, where wave 1, wave 4 does not overlap to the territory of there. But if there was a massive body, then I would be absolutely concerned, okay? Major concern right there. So now, if we look at this right here, we say, okay, well, this could be 1, 2, 3, 4, and 5, right? Absolutely. But we got to go over many things. Let's go over back, first of all, to the weekly chart, okay? The weekly chart, we see that this one bounced massively off the 55 moving average. We are already 2 days into the week right now. And 2 days into the week, we got a little bit of volume, guys. We have barely any volume, and that is what concerns me. But nevertheless, we cannot deny the fact that this right here is a dragonfly doji, or a hammer, right? Or a doji, whatever you want to call it. Now, let's look at the market cap right here, guys. When it was 6K, right? When we reached 6K, we were actually reaching about 320 million or billion-dollar market cap, right? And what concerns me right now is a lot of things, guys. Okay, first of all, we're not going to get into the fundamental side because the fundamental side is massive and there's so much going on right now. And believe it or not, guys, I follow the fundamental side. I don't ignore it entirely, right? I just choose not to talk about it in my channel because my channel is specifically geared towards day traders and swing traders from a specific technical analysis perspective. Now, let's check out the date of when this downtrend reached 6K. That was on February 6th. Take a look at February 6th, guys. February 6th, we got ourselves 14 million, right? On the downtrend, it was pretty heavy, and then it dropped. This was consolidation phase right here where it was declining, but it steadily started going up to the point where it reached $14 billion. Now, a typical guys uptrend would be this one reached 14,000 and we would just go up and up and up and up and up in volume and would just ramp up. More market cap would be more money would be added to the market cap and it would increase slowly as well, right? But we ask ourselves, why? Why the heck is the volume declining so badly right now? We've got 3 hours left in the volume right now, and guys, we are only at $6 million average. That is pretty bad, okay? We got to acknowledge the fact that it is slowly declining over time, right? And we don't like that at all, guys. We don't like this, and this is a very important point to make note of. Volume is a key indicator, and it must be respected. So now, let's look at the daily chart here. This is a very critical number, $9,079 right here. This is the high of this guy. Let's actually make a line here instead. Or is it 74? I can't remember. It's a high of this candle. That's 74, okay? We're going to take a look at price action according to candlestick analysis as well, which I'm going to start incorporating a lot of other things other than just this. Now, what we notice is right here, this range right here, okay? This range right here, as soon as it gets to it, it likes to reject it, doesn't it? Take a look. Right here, right here, right here as well, and right there. Every time, it has made a pretty decent rejection there, okay? Take a look. Do you guys see what I mean? Right here, right here, right here. So now we can almost say that we're range bound, okay? We can almost say that we're range bound, and a lot of people would consider this actually a no trade zone. And a no trade zone basically means that it doesn't have a definitive price, right? Where it's going. And it doesn't have a definitive price up or down. It's just kind of hovering in this area right now that's being range bound. And if we actually look on the weekly chart as well, okay, let's say we looked on the weekly chart. Right here, the low was about 8,000. This one here was about 6,000, right? So we can definitely see that this is a no trade zone between the 7,099 or 7,074 and pretty much the bottom of this candle, we'll say. Right there. Whatever the bottom of this candle is, about, 8,069, and between 9,074. A lot of people are not trading in this zone, guys, because they're just worried right now, okay? They're worried, but I would extend it down a little bit to probably right about here. This seems to make a lot more sense to me, or even right there, okay? So until we get a definitive direction up or down, I don't think a lot of people are going to be trading, guys. A lot of people are going to stay out of the market like me, and they're just going to be waiting. Does this make sense so far, guys? I really hope that it does, right? So let's look at our daily chart and just do a little candlestick analysis right here, okay? What we see so far, okay, let's talk about price action for the past 7 days. This is a massive rejection candle, obviously, to the downside, right? Huge rejection candle on the daily, and I think it rejected off of, wow, it actually fell below the 200 EMA. Ooh, scary right now, actually. So now, okay, let's go back to 55. What we see right here is this was a very relevant point, okay? It was a very relevant point with the previous candle here. This one created a massive rejection. What this psychology refers to is that the bulls have won. The bears tried to reject down to a 6K ranges, but the bulls immediately rejected back up to over here where this was the actual open, right? The open was about 7K. Bulls pushed it down, bears rejected it heavily. And naturally, we met resistance on the prior candle to right here around the 7,800 range, which was right here, 7,800. So we finished off the day rejecting it right there. And the next day, a lot of people thought that we were going to downtrend again because it closed off with this doji type candle, right? Doji / shooting star, whatever you want to call it. I'll call it a doji. So it tried to bounce up and break to this previous high or previous low right here, but it just couldn't do it, right? So we call this an indecision candle. And then the next day after that, we finally broke through it. Okay, we broke through it with a good body. So the body closed off the day with this specific point right here, which is very critical. We have to remember that this 7,800 range, okay? 7,800, please remember this number. So then we finally broke a body through it, which is a great sign, right? The bulls attempted to push it up, but the bears rejected down. And then the next day, we opened right here, okay? We opened right here, and then the bulls attempted to push it up, and that's what they did, okay? That's what they did. They pushed it up. Or we can see it as it opened right here, right? It opened right here. People decide to take profit, or bears try to, you know, step up their game there, and the bears try to reject them to the downside. And this acts as a critical resistance right here, or support rather. Lots of wicks, rejection right there. This one rejected down as well. This one rejected up. This one rejected up as well to both points. So now this actually becomes a very critical zone right here as well. But if you notice what happened, the bulls have won. The bears tried to push it down into this lower zone right here. This would have been a no trade zone for sure. The bulls pushed it down, but the bears simply rejected them with a very long wick, creating that long wick and a big body right here. But the volume is the bad one, right? The volume is what we were worried about. And then the week closed. The week ended up closing with this beautiful one right there. It was attempting to break up to right here, but it just simply couldn't get to the higher high of the 9,500 ranges. So we consider like 93, 9,400, guys, some major resistance right now, just based on candlestick analysis. So once again, I'm going to try to incorporate a lot of different types of technical analysis for you guys. I'm not a one-dimensional trader, just put it that way. I can trade using so many different strategies that I've studied my butt off to learn it. And candlestick analysis is incredibly important as well, because it combines price action. And price action traders, they're very good traders, guys. They are incredibly successful. There's no one way that's better to trade than another way. We have to respect the fact that there are many ways to trade. And this way, for example, the chart guys or Tony Vay's, right? They're very inspirational people because they adopt a very different mentality and method of trading. But I like to incorporate everything. So what I like to do is I see it like an unsolvable puzzle, put it that way. And there's only clues for us to get closer to finding it, but we never actually solve it because there's no answer, right? But we try to point ourselves in the direction that we feel leans more than the other. And that's how we trade, right? We have 50-50, first of all, and then we find little clues as detectives to try to find which way it leans more than the other. Right now, guys, it leans, I'm neutral right now. I'll say that right now, okay? So now we get this candle here, which is a really big indecision candle as well, right? And we finished off the week there. And boom, this candle right here ended up marking, right? It ended up marking the weekly doji candle. So that was from basically the, what day was it again? February 20th. Till the 6th, right? 30th till the 6th about. So right around here, I believe. 30th, right? 30th to the 6th, right around there. So, yeah, so anyways, this was the weekly close right there. And they created a massive resistance at $9,074, okay? And then surely enough, after we peaked there for the week, the bulls tried to take over, but they couldn't. The bears just simply won. It rejected it down to this previous line right here. I'll actually intersect these points. It rejected it down to this point right here, and we simply could not get a higher high than it, okay? Or we couldn't break below it, but we rejected it rather. And then the next day later, right, we opened right here, and boom, we got ourselves this massive engulfing bullish candle. But the volume, guys, the volume is what people made it question, right? That was very questionable. And this was yesterday's close. And that's when we had our rally, which was great. But now, guys, we've only got 2.5 hours left in the day. And this is called a hanging man candle. It's a pretty brutal name to call it, right? But this is a hanging man candle, right? I can't even circle it. Right there. And the reason why they call it a hanging man, well, just think of it, okay? I'll never make light of the situation of doing something like that, but that's what it's called, right? Just imagine someone being hung, right? So don't take offense to that, guys. This is just the name of the candle, okay? I'm not making light of these situations at all, nor am I bringing any politics or anything into this, all right? So please respect that. Sometimes I don't want to say things that offend people, so I have to make sure that I'm very clear that this is just the name of the candle. It's a hanging man, and it looks like someone who is hanging himself, right? Basically, there's a long wick coming down right here, right? Super long wick coming down right there, which implies that the bears, guys, are actually starting to gain control. I know you guys don't want to hear that, but the bears are definitely gaining control right now, okay? So now we get this long wick, right? And we also get this thing. It's like a double tweezer, or it's like a tweezer. Take a look at it, guys. Okay, we get two little tweezer tops right there. And because what this means is that the bulls, think of it as a sports game. A sports game where you got an offense and a defense, like hockey. Now, because it's a game of hockey, you know, there's usually people attacking and defending, and both teams are doing both, right? Both teams are on the offense and both teams are on the defense at most times. Well, what this means right here is that one team, the Bulls, they are trying very slightly to attack, right? Trying slightly to attack, and that's what these wicks mean. They make their offense, they're trying to fight back, but the Bears are just defending so hard right now. They're defending so hard to the point right now, okay? To the point right now that the Bulls can't get a higher wick. If they actually got a higher wick, that would mean that the Bulls are very heavily on the offense, right? They're heavily on the offense. But because they're not heavily on the offense, it just shows by a tiny little wick. And with these tiny little wicks, what the Bears do is they say, okay, we're going to defend you guys. We're going to defend from your attack. Not only are we going to defend from your attack, but we are going to also go on the offense ourselves. So they go on the offense after defending, and they push down with a long wick. They push down with a long wick, and they haven't won yet. The Bears haven't won yet because the Bulls, what they do is they defend. They simply defend this candle right here, right? So what this shows is that the Bulls are not on the offense. And if they are, it's only to buy a tiny little wick from those tweezers. And then the Bears, they start attacking. They push it down with a long wick. And the Bulls are defending right now. But what it means is that since the Bulls cannot attack successfully and aggressively, and because the Bears can actually defend very successfully with a short wick, then the Bears are also on a massive offense by pushing it down with a long wick. It implies that the Bulls are starting to lose control heavily, okay? I know you guys don't want to hear me say that, but that is what it implies right now for this particular day, for the intraday, okay? And we also see it with the volume as well. Now, this is a lagging indicator. Anybody who says the volume is increasing, you have to realize that this is a moving average, 20, okay? So it's a lagging indicator. Okay, now that we have done our technical analysis for price action and candlestick as well, we're going to talk about this right here as well, very quickly. Like I mentioned, that we were doing the Elliott wave count, and I simply did not finish it. So now we're going to call this 1, 2, 3, 4. This is a lot of theory today, right, guys? I hope you're enjoying the material because I enjoy teaching you guys all of this stuff that I know. So people would call this ABC. We'll say I'm entertaining the idea. I don't think that this is the actual count right here, but I'm going to actually entertain the idea, okay? So I believe that this is basically wave 1. That is wave 2. And this was wave 3 in here. And this is a sloppy wave 4. And there will be a wave 5. Somewhere in here attempting to break it. Now, I will also entertain the idea of the inverted head and shoulders, okay? And you guys have to remember what I said about that, right? I thought it was an inverted head and shoulders, right? And I said right away, we were talking about the neckline, that it's most likely going to bounce off of it first. Bounce off of it first, and then finally make an attempt. So this is how people are looking at it right now, okay? I don't agree anymore that this is... I will say firmly right now that I don't believe this is a head and shoulders inverted, okay? It doesn't fit the criteria of it in terms of breaking through or below and making a very relevant, bounce off of it. I burped there, excuse me. So I'm going to entertain the idea. I don't want to look at head and shoulders for it, but I'm just entertaining the idea because yesterday's flavor of the day was inverted head and shoulders. A guy posted head and shoulders, like the shampoo, and he just flipped it upside down, and he said this is the flavor. This is what Twitter's talking about right now, okay? So that was pretty funny when he said that, for sure. So do you guys see it? That is the inverted head and shoulders, which I do not agree with right now, and I stand by it. I agreed with it a little bit, but I don't want to see head and shoulders, okay? I don't want to see things just because people are mentioning it or because it looks prominent and very easily identifiable. I don't see this as a head and shoulders because there was no clear definitive move along this neckline. But what I will acknowledge is that regardless if that's a head and shoulders or not, we're definitely forming, and also it's so arbitrary, the point, right, that we're choosing. It's like, okay, let's just choose this point. Let's choose 2 points right there. It's an automatic head and shoulders. It's like, okay, not really a fan of it like that, okay? But what I do have to admit is that if we drew a resistance line like this right here, right, and what we're noticing is this right here, okay? We're noticing that some regions right now are actually trapped, okay? Some regions are in a bull trap right now, so we can consider it like that. And I'm also going to extend it to this region right here. There was a lot of activity right there, right here as well, and all of right here. So we're actually at a very critical point right now. And the bulls are absolutely losing. I will admit that, but they have not given up hope yet, okay? So if this was a count right here, all right, if this was a possible valid count right here, then this would actually consider, this would be wave 1, okay, wave 1, wave 2 right here. This is our ABC, and is this wave 3? What? Okay, if that was our wave 3 right there, then that would have to imply one thing. It would have to imply that because wave 1 is so much strength, right here, there's so much strength right there. Wave 3 is tiny. It would have to imply one of two things. It would have to imply that this wave 3, to make it according to Elliott wave analysis, would have to be a massive wave like that, okay? Just to fit the criteria of that wave 3 is often the longest, but never the shortest. Now, if that criteria was not met, where wave 3 was extended, or with the fifth subwave was extended right here, right? Because we clearly have our 1, 2, 3, and 4 count already here. Then our fifth wave would have to be very short, because wave 3 is often the longest, but never the shortest. And that, guys, we don't like at all. That's nasty to see an impulse wave move up like that, and I do not like that at all. So let's go over this right here, and let's talk about moving averages right here, okay? What we see is that this is actually fanning out right here, okay? We see it fanning out right here, but guys, I don't like it at all. I don't like it because there's only, like, this is first of all 30-minute chart, and we're getting a doji at the top already with a lot of rejections, okay? And this does look like it's about to fan out for my 55 moving average strategy, if you guys remember as well, right? It looks like it's ready to make a bull run, right? Looks like it's absolutely ready to make a bull run. This one is actually hovering off of it. Look how well it bounces off of the 55 EMA. Bounce, 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 bounce. And this one right here actually bounces off of the 8, 13, and the 21 moving average on the 3-hour time frame. So on a high time frame, guys, even, we've confirmed an uptrend, quote unquote, okay? We've confirmed an uptrend, but we haven't actually parabolically moved up yet. And that is what bothers me. And we also see a decline in the volume, major decline in the volume. So we think of the mixed signals that we're getting in the market right now. Is it going up? Is it going down? I've got no idea, okay? No idea. Until we break a key range right now above the 80, right here, guys, this key number, 9,000 right here, okay? 9,074. There's no way that I think a lot of people will enter it. But I think that if we actually break 9,074, we are going to be in a massive bull run for a while, okay? So on the 12-hour chart, really far away from even the 55 moving average. So now let's look at Bitcoin again. Nope, that's not it. Nope, that's not it either. I got a lot of charts, guys. Don't mind it. No, I got to make sure they're nice like that. Very OCD with all my, you guys should see all my monitors, super OCD with it. I have to make sure that they're all lined up nicely on the 3-minute chart here. Okay. This is how I trade, right? I look for key signs of oversold, overbought regions, and I go from there. If you look at IOTA right now, it looks like it's on a tear. So what I do is I hunt, guys. I hunt and I hunt and I hunt. So, you know, I look for oversold signs like that, and I look for a crossover. So I see that, hey, EOS is probably about to cross over soon. Hey, right here, IOTA is reaching oversold zones right now. Is it going to be a good time to short it right now? See IOTA just going up here. It's only got 9 million volume, though. I'm not really interested in trading something with 9 million volume because my strategy is only for high volatility and lots of volume. Yeah, so anyways, let's go back to our 1 hour, 45-minute chart, for example. It doesn't really matter which one to me too much, okay? So now we ask ourselves, I pointed out the two scenarios, right? Where the wave 5 has to be pretty darn big to be bigger than right here, okay? So I say to myself, this cannot be a valid count. And I don't like this count because of all the other sub-criteria that must be met after this wave 3 forms, right? It just doesn't really fit my definition of it at all. So I'm going to take this one off of the table now that I've entertained the idea of that right there, of that being ABC. Now I'm going to call this right here actually my wave 2, okay? I'm going to call this my wave 2. and I will call this subwave 1, okay? Call this subwave 1, subwave 2, now this will be subwave 3. This will most likely go to right around this range, right? And I think that we're going to end up bouncing. I don't even know if all of these are going to make a critical point or not, right? A critical support point, so we'll have to see about that. And the third wave always has to be impulsively moving up, right? It has to move upwards impulsively, and the third wave cannot overlap wave 1 territory at all. So now we got to identify some key points right now, okay? Now, if this were to make an impulse wave up on the third wave, then this one has to have enough strength to the point where wave 4 does not retrace to the territory of wave 1. So now we adopt this rule that because our wave 2 retraced heavily, then we can assume that the next wave 3 will actually have a lot of strength and not retrace nearly as much. So this is the scenario where it has to go up really high, right? Either that or, you know, it does a super bullish retracement of about 236 range only, which I'm also not a fan of because it doesn't happen often. And for it to happen often, it actually has to, guys, it has to absolutely 100% have a lot more strength, right? Did I say that right? I have no idea if I did, but what I'm getting to is that this is wave 1 that I'm seeing in here still, regardless. Wave 1, wave 2, wave 3, that fits the criteria there, wave 4 and wave 5, okay? So, yeah, so, you know, is this wave gonna fail somewhere? It looks like it's about to fail already, and it looks like it's trending above this line, right? Right above this, what you guys would call the neckline. It broke out of it, we can say it broke out of it to 9Ks, right? Broke out of it to 9Ks. I'm gonna delete all of this actually and just draw it again in here for you guys to see. So this neckline is like, I'm just entertaining the idea, right guys? Like that, right? So, you know, we can say it broke out of it a little bit. We can say it's testing it right now. It is so subjective how you draw this, okay? So I'm just gonna remove it off the table. I don't like that. I don't like that at all, where it's so subjective and people I think are just trying to draw it to make it fit to their bias. And I don't like that. I mean, look at this, guys. I mean, you're gonna draw it from this point down here, right? You're gonna try to, you're gonna try to overlap it to these points. You're just gonna try to make them fit. It doesn't work to me as an inverted head and shoulders at all, okay? It just doesn't. It simply doesn't. Like, you're just making criterias fit, in my opinion, because there's relevant lines that actually meet up. Sorry, I didn't mean to sound hostile there. I'm sick of seeing this head and shoulders thing, right? I don't think it is at all. The best way to do it, in my opinion, is to draw a realistic trend line right here, like that. That is a very realistic one where the wicks are poking out of it. Wicks are poking out of it, right? It's very realistic to me right now. You can almost call it a double top, right? And now another way to look at this is right there. Okay, we have to draw very specific points here. If we draw like that, wick body to body, of course we can see it break. But what if we drew it from wick to wick roughly, okay? Wick to wick roughly like that. That looks really good, doesn't it? Pretty good. So going back to my 1, 2, 3, 4, 5 scenario, like here, where I have 1, 2, 3, 4, and 5, okay? Going to my scenario of right here, where this is 1, this is 2, this is 3, right? And we want to make a fifth wave somewhere up there, I'm guessing. Somewhere up there, like that. And then we bounce off of this line. This is the bullish scenario. I'm going to present you guys the bearish scenario as well, okay? So does this look like it could do something like that to you guys? Right? Where it looks like it could possibly do something like that, where it's trending up here. And all of this is basically going to be a consolidation pattern. And let me explain to you what I mean. So if this was 1, 2, and this is 3, this is 4, right? And it's attempting to make a fifth wave somewhere up there, okay? Fifth wave somewhere up there. Then this whole structure over here will most likely be the consolidation range right in here. And this is what to watch out for. This is what to watch out for right there. We have to see what range this makes. And this whole thing is most likely making some sort of A, B, C, D, and E. Where within this ascending triangle, you can call it, or symmetric triangle, it will most likely make 3 attempts. This is the first, this is the second, this is the third. And then we will see what happens at the critical apex. There's no point denying that this is a very critical point right here, right? This support line, depending on how we drew it, right? That's a pretty good point. So now we have to wait to see if this wave is going to fail and how high this one will go. So based on Elliott wave analysis, there's a lot of signs that points to a very bearish sign right now. Bearish market still. There's nothing bullish about it, guys. The only thing bullish about it is the weekly candle close, in my personal opinion. Other than that, everything just looks like it's in limbo, and it's just a matter of waiting to see what more bearish signs we can see. The impulse wave here was pretty nasty, right? This leading first wave diagonal, right? If we entertain this idea of 1, 2, 3, well, the third wave would have to be very bullish right here, and then it would have to break above this resistance line and then trend no lower than lower to here, and it would have to stay bullish that way, right? So this is my thoughts that, like, you know, we got to get to the 9400 ranges, that we have to get to 9400 to remain bullish, because if we get to 9400, then our Fibonacci right here actually stays around 9400. Right there, 94, because then we bounce off of the 382 Fibonacci level during this correction, which is above waves 1 and 3 here, for example, and also it fits into the rule that wave 4 does not fall into the category or the territory of wave 1 there. And then this is, you know, where we can get more targets up there. So if I use a target like this, for example, and I use a 1-to-1, what we can see clearly is that this is a very, very viable target right here. We're gunning, guys. We're gunning for 94, 93, 9400, but we don't know if it's going to happen. So I'm a little bit bearish right now until we're proven otherwise. So I've got no price predictions for here. I do believe we're absolutely trending into here, right? Just give me a second here. I'm just going to have a sip of my water. So my target for today is, unfortunately, the high for today is 8,900. That's going to be the target for the day right here, short term. Okay. Now my long term target, my medium term target rather, as in a few days, is going to be about 92 to 9400. Those are critical points for the bull scenario. Now for the bear scenario is like this, okay? That we completely break down out of there. And that would be scary, guys. That would be super scary if we broke down. And remember earlier, I said that that particular range right here on the daily, this critical point right here, around right there, this massive point right here, because it intersects a lot, right? There's lots of rejection around 7,900, or we'll actually say right at 8K, okay? We'll say right at the 8,000 range. That is where the major rejection is, but more so around 79, what's the low of this candle? 78.51, 7,800, 79.60. Yeah, right around this range right here, around 79.50 is where it needs to hold, guys. It needs to absolutely hold right now, okay? So if this fails, we have to consider these targets over here for a possible bounce, right? The numbers are always there, 8,300. And then surely enough, if that doesn't hold, then we're going to fall down to basically 8,000 range to 7,900 ranges. And then we'll be in a whole lot of trouble, guys, if we do not break this. I'm saying it very clearly that if we do not break upwards into this trend right here, then I hate to say it, but the bullish scenario is literally over. The bullish scenario is over because I've now counted every single wave they have failed, right? That they will have failed. The wave 4 subwave here will even trace lower than this wave 1, right? And it will go well into the territory of this one as well. And even if I entertain the idea of that this was A and B, and this was the first impulse wave up, then the same thing happens as well. So we're led to believe that we're in a fairly bearish trend right now because there's no positive signs of an uptrend other than the hope that this last impulse wave will break out of here, okay? That's the last hope. So, and the bearish scenario, guys, is still here to stand, right? If we break out of here, I mean, it's pretty simple to project, in my opinion, right? You know, if this was A, B, and C, I'm gonna actually just go here as well for you guys to show you from here. Remember how we called this A, B, C? This was A, this was B, and C right here. Well, we're going to take our Fibonacci from B, right? We're going to take it from point B right here to see where it is roughly. Okay, and what we see is that, guys, we can't even break above the 382 region. And that is actually a very scary sign. For us to be very bullish, come on guys, come on Bitcoin, you guys can do it. Break up to at least the 0.5 Fibonacci level. But this whole region right here is actually pretty much the 382 region. So we're getting a lot of pressure to go down right now based on candlestick analysis, based on price action, based on volume, based on Elliott wave theory. Yeah, so I'm not doing anything today, guys. I'll be very clear that this is a no trade zone for me. I'm not going to have FOMO. I'm going to wait for a decisive move to go down or a decisive move to go up, okay? That's basically what's going to happen. Make sure you guys draw in this trend line support right over here and acknowledge that something could very well happen soon. And we don't know when, but it's going to happen before the 14th. That's Valentine's Day. I really love how Bitcoin's going to give us the best Valentine's Day present ever. A bull market or a bear market, guys. So this is going to be Bitcoin's Valentine's Day present to us. And these are my quick thoughts. Quick thoughts, guys, quote unquote, for Bitcoin, okay? I've got no projections today, except for a bearish scenario down to 8,300, a bullish scenario up to 9,300, okay? 9,300 if we break 9,074. But if we break this wedge over here, we're doomed for a while, okay? I don't mean to scare you guys, but I do want to offer both bearish and bullish scenarios today because we simply don't know. Anybody who claims to have figured out Bitcoin and what it is doing, that is a completely biased opinion. We have to make sure we respect the fact that traders should always offer both perspectives, bull and bear. And if you have a bull and a bear scenario, you can react either way. If you were only bullish and you went to a long position, your mindset and mentality is already stuck in a bullish mindset, right? And then it's going to be hard for you to maybe cut your losses. It's going to be hard for you to accept the fact that we're going down. But if you're bearish, same thing. You've already shorted maybe, or you're waiting for confirmation to go down. And if it goes up instead, then you're in limbo, and it might be more difficult mentally to accept the fact that we need to react to change, and we have to be able to not predict, but accept the fact it can go up or down. And I'm a very reactive trader. And because I'm a reactive trader, it gives me a little bit more of an advantage, I'd say, than predictive traders. So if we did a technical analysis right now, guys, and we said, yep, it's going down, yep, it's going up, that's a pretty bad mindset. But a better mindset, in my opinion, is it may go up, it may go down. And regardless of which way it goes up or down, I have my targets and I will make a good decision and I will exercise good trading practices based on what happens. So let's go over really quickly as well, actually, risk to reward scenario, okay? What happens if it breaks down? Why do we use this point up here? We use this point up here because that is where there's a lot of activity, right around here. Massive activity, as you guys can see, okay? Massive activity. Why do we use this point? Well, because there's a lot of activity right here as well, and we already did our analysis. It's the first relevant support point. So let's go over a quick risk to reward on breakout, on confirmation, okay? Now, if you play altcoins, great. A 4% increase on Bitcoin will actually end up getting you guys maybe, who knows, up to 8 to 10%, because altcoins like to go by a multiplier, right? They like to go by a complete multiplier of Bitcoin. So if Bitcoin goes up 5%, altcoins will go up by that percentage multiplied by something. So that's a pretty good risk to reward if it breaks out, right? You set your stop loss slightly lower than where this double top, quote unquote, resistance is that now acts as a support. Now let's see, I'm just going to draw this one to the side to make it more obvious as well. Let's see, it breaks down where you entered right around, right around here, okay? I'll actually move it to well over here. You entered around, I don't know, wherever it breaks down. The entry is up to you guys. Set your stop loss slightly higher than it. Actually, I should probably move this down now to just over here and show you guys from here. So you entered on a breakout there. Set your stop loss maybe slightly higher than this resistance point up there, okay? In the other bullish scenario, it was as a support point, right? Now it's a resistance point. and you get a risk to reward of this one of 4.1, and this one you get a risk to reward of about 4 to 1 as well, 3.82. So it doesn't matter to me, guys, which way it goes. It really doesn't at all. I'm happy with these risk to reward scenarios. I'm going to gain 5% either way, right? 5% coming down, 4% going up. And to Bitcoin, that's a pretty good, it's good to me, put it that way, right? It's not the best to everybody, but it's a pretty good scenario to target. I mean, if I'm playing a $10,000 position, which I will, well, 5% is still $500 for one small play. I see that as pretty acceptable. If I played an altcoin, I'd probably gain a lot more than that. So this is the bullish and the bearish scenario and where we stand. I hope you guys have enjoyed this afternoon update for Bitcoin. And other than that, please make sure you guys upvoted on steemit, okay? Make sure you guys create an account. I would so appreciate it, and I hope I've earned the right to ask for that. If you guys like the material, please upvote it on steemit. I'm trying to reach a very broad community, okay? And I want to be clear that the money on steemit is not a lot, okay? I mean, my steemit account has very, very little, guys, funds in it. I just want to be very transparent about it as well, okay? Some people think that I'm like a whale or something on steemit. No, not at all, guys. I've only got $860 on here, right? And I'm just trying to reach a broader audience in the community. I've got about 3,300 followers, and I'm sure that most of you guys are my followers on there, right? And I think that we should try to always make the community flourish. So if you guys think that I'm doing a great job, then of course, if other people found me and discovered me, then most likely they would think I'm doing a good job as well with all of my tutorials, because the main goal, guys, is to target people who want free and accessible content. And this is a big community. I believe in the project in the future. So other than that, guys, make sure you also upvote it in the future. Make sure you like, subscribe, and share it to the material as well. And I hope to see more of you guys on Twitter and in my videos. And make sure you guys leave your comments for whatever you guys are thinking, right? I don't really reply to a lot of comments such as, what do you think of my technical analysis, like on TradingView, for example, or what do you think of this specific coin right now, right? I don't really have too much opinions on them, but what I will do is do a very quick analysis on a lot of altcoins from now on, just like 5-minute ones. I kind of dropped the ball a little bit on that, but the reason why I don't really take a look at what do I think of my chart for this, if it's a coin I don't trade, it's because, guys, I need to spend 5 hours on a chart before I can even give you my opinion on it, right? If I gave you my opinion, it would just be a bad opinion to ask for. So I apologize if I don't get to all those types of comments, okay? But I definitely try my best to get to every single comment. And sometimes it can be very overwhelming with the amount of content or the comments that I get through, right? I have about 100,000 subscribers on YouTube and on Twitter combined now for followers, maybe 120K altogether on the internet. So so please understand that I love you guys, and I'm trying my best to get to all the comments, right? At the end of every night, I actually spend about an hour and a half just in bed lying around there and just responding to every comment. And I use it on my phone, right? I talk into my phone, and I use Google Voice. It's the best thing ever, right? In the morning when I get up, I'm also spending an hour on the phone and getting through every single comment and feedback, because you guys are an important part of the community to me. And because I value you guys and respect you guys, I will absolutely try my best to get to your comments, all right? But please understand that sometimes I will miss them because there's a large amount. So other than that, baby whales, tiny dolphins, and tiny, tiny, mini little penguins. I hope you guys find yourselves some seal, but keep in mind that the seals right now, they're buried very, very deep underneath the ice, right? And they're swimming away from the sharks and the whales right now, or maybe they're perched somewhere high in the rocks where us whales can't get to them, and we just simply cannot find some profit to eat, because I consider this a no trade zone. So other than that, everybody, have yourselves a phenomenal day. I hope that the rest of the week is awesome, and I look forward to seeing you more. Bye now.